You're listening to the Business Wealth Impact Podcast, your source for empowering information and cutting-edge ideas from the world's top minds. I'm your host, Jeanne Amlour, founder of seven-figure coaching company, Jeanne Amlour International. Join me on a journey to unleash your potential and create your highest success. Welcome to Business Wealth Impact. Hello and welcome to Business Wealth Impact. Today we have Josh Krafchick. Growing up in a divorced family was always an issue for Josh, and at a young age, he knew that money was important and how much stress it can create when you don't manage it effectively. After graduating from Florida State University with a degree in actuarial science, he started working as a financial advisor and figured out that financial advisors are actually in sales. From that moment, he made it his mission to educate people on the best ways to grow their wealth. So great to see you here, Josh.
Yeah, happy to be here. We finally made it happen.
Yeah, awesome. So, what I was really interested in, and we were chatting about this earlier, was like how to determine when an investment is good and how to make all that happen. Because I think that people don't know how to do that. So, why don't we just share with people, like, how do you evaluate the investment? How do we know when it's a good buy and all that great stuff?
For sure. It all comes down to finding a wonderful company and paying a fair price for it rather than as a Warren Buffett or Charlie Munger, maybe it was both of them, is like buying a fair company at a wonderful price. And that's what a lot of people are doing. They're buying a fair company at a wonderful price. They're like, oh, like how much lower can it go? It used to be at 20. Now it's at $5. It has to go back up at some point. And a lot of people have like a very short-term mindset when it comes to investing. They're looking for like, hey, like how do I take this thing from $5 back to $20? I could 4x my money. Versus looking at a company and saying, hey, it's growing over time. It's going to give me reasonable rates of returns. And it's something I want to own for the foreseeable future. So I'm going to buy it because I feel like it's a fair price. And I'm just going to, I tell people it's called fishing, not catching. So you're just going to sit there and you're going to just wait and see what happens. So ultimately, that's what investing is. It's a lot of sitting and waiting.
Okay, so you are sort of kind of following the Warren Buffett style because he only buys something when it's a great deal. Like his whole thing is, don't buy just for the sake of it. So you agree with that, not to buy just for the sake of it, right?
Yeah. And with the markets being at lifetime highs right now, from a psychological standpoint, our brains are wired when we see something going up, we believe it's going to continue going up. When it's going down, we believe it's going to continue going down. That's just the way our brains are wired. However, if the price doesn't make sense, then sometimes doing nothing is your best decision when it comes to investing and being patient rather than just always pushing chips in, pushing chips in, pushing chips in.
Right. Okay. So there's a point where it's just good to do nothing and just keep your money in cash till something happens and you feel like, okay, now I feel compelled that I really want to invest. Correct?
Yeah, cash can be good. I mean, putting it in a high yield savings account is a good way to make a little extra money. You can even buy short term investments such as treasuries or certificates of deposit, which are FDIC or insured by the US government. So they're as riskless as you can get. And if there's a market downturn, typically, except in 2022, that year was a little bit different when interest rates rose at a phenomenal rate. You could sell those fixed income or riskless securities at potentially a little gain or a little loss, and then reallocate those if there's any shifts in the market, especially on the downtrend when things get exciting for investors.
Now, the thing is, you're no longer a financial advisor. You're actually a stock picker now. You're more like a portfolio manager now, right?
Yeah, I mean, most people, I've always been on a plane, and I don't know, if you've been on a plane and someone's like, oh, what do you do? I tell them, they're like, you got any hot stocks for me? That's always the question that I'm asked.
But you're more than a financial advisor because financial advisors don't actually pick stocks, right? Because don't you manage people's wealth for them as far as their portfolio and buy this and like pick the stocks for them and do that for them now?
Yeah, and I wouldn't say it's picking stocks. I mean, that's what most people would call it. It's more developing a model, picking companies that you like inside that model, and then over time, making minor adjustments to the model based on what's happening in the world. So you want to pick companies that you believe in, not just like, hey, I got this hot stock tip that you need to get in on. It's it's going to go from $10 to $30. I got this info from a secret source or
Mm.
from this newsletter I pay $9.99 for.
Mm-hmm. Mm. Okay, so well, last time we spoke, I was amused because I was talking about a well-known investor, and you said, "Oh my gosh, that person is not good. Look at the numbers." So, what's going on with that? That people are getting like this great reputation. They're so amazing, but you're looking at their numbers and you're saying, "Well, that's actually not amazing." Is there some sort of myopia going on in the marketplace that it's just we are believing marketing and we're not numbers and we're like saying, "Oh, this person's so amazing," but the numbers don't add up? Because I was pretty amused when you said that. What's going on with that? That people are. What is going on with that?
I mean, it's marketing or
Mm,
people wanting to believe what they want. I mean, we were talking about Kathy Wood and her flagship fund, ARK Innovation ETF. I just pulled it up now.
mm,
I mean, over the last 5 years on the iPhone, it says she's up 26% over the last 5 years.
mm.
If I did that, I'd be out of business.
Okay, so how come she can get away with that, and we're saying how wonderful that is, but you can't?
I mean, purely the size. I mean, they have a lot of assets under management. They charge, I believe, like 0.75%.
Mhm,
They market well. She has rabid fans.
mhm,
And if you have rabid fans, they're going to follow you through thick and thin. Uh, but yeah, I mean, if I did that for our clients, I I would probably be back in corporate America because I would have failed.
so her clients are not as, demanding as your clients?
It's just when you have the fund size of hers. Like, let me pull it up. Let's see. They have. Does it say on here? Doesn't say. But I mean, I'm pretty sure she has like billions of dollars under management.
Mhm, wow.
So for billions of dollars to pull out, it's not as easy as millions of dollars to pull out.
Mm, mm,
Um, Also, a lot of people who buy these funds may forget about them. They don't look at their accounts. They may not even be aware that the investment's not doing well because it did do well for a short period of time.
mhm,
Uh, However, that was more of like a one-hit wonder, and
mm,
that goes back to buying fair companies at wonderful prices, and she was right for a period of time.
mhm,
However, with investing, you need to be right over 5, 10, 15, 20,
mm,
25, 50 years worth of time. You can't just
mm.
be right once.
Okay, so you're saying that you're actually a better stock picker than that company?
Yeah, I've definitely done a lot better from a portfolio management point of view than she has over the last 5
Okay,
years
well,
for
that is
sure.
fascinating. So, what makes you better? Why can't other people figure this out? I mean, if you worked for them, then they'd be doing better stock picks. Is that what we're saying here?
If they've done what I've done for our clients, yes, their returns would be much better over 5 years
Mm.
than what I see is the truth as of today.
Okay, but how long has she been doing it? 10 years?
She's been in the game for a long time.
Right.
I don't know much about her. I was surprised to see her age. She's been around for a while,
Hmm.
but I mean, I don't know much about Kathy Wood other than I know people like her.
Right. Okay, no, it's just that you mentioned that.
I could like someone too, but when you look at the results,
Mm.
the results are. I mean, that doesn't even does that even keep up with inflation? What have we seen in inflation the last 5 years?
I'm not sure, but maybe they're looking at 10 years and you haven't been doing this 10 years. That's what I'm thinking. Like, what's the longer, you know? So that's so interesting that basically, I was amused by that. And I thought, well, I got to have him on the show. He's saying that he beats Kathy Woods. So what's your secret to being better than all that?
Well, I mean, compared to Kathy Wood, pretty much I would say any average to above average money manager would be outperforming her. But when it comes to what I've been doing that's different than what most financial advisors are doing is buying individual companies, not
Mm,
just investing in products,
mhm,
not being scared to make the tough decisions, even
mhm,
if that means losing clients. As long
mhm,
as I feel like it's the best thing to help our clients make money, I'm going to make that decision, even if it's unpopular.
mm. So, how did you get from being an everyday financial advisor that doesn't do what you do? Because I don't know any financial advisors that actually do what you do. We call them something different when we're doing what you're doing. What got you here? How did you get good at this?
Well, like anyone, you practice with your own money.
Hmm.
And I remember you could do, and you could still do this. You could do paper trading, so you can like get a like a fake $1 million portfolio, and you
Hmm.
can like practice trading.
Hmm.
And then once you get confident, you start playing with real money. you start making mistakes with your own money. You start to find things that work and what don't work.
Mhm.
And then eventually, you start having people asking you, like, what do you think about this? And then you go, well, if people are asking you for help, you must be pretty good at it. So I just continued the work and left corporate America in 2017, worked for a couple financial advisors that don't really invest money like the way that I invest
Mhm.
money, and uh, decided to start my own thing in 2020.
Okay, so you've been at it 4 years, and how many assets under management do you have? It's not a billion, clearly.
No, we're approaching 10 and a half now.
10.5 million.
Hmm.
Oh, well, congratulations. So it's growing.
Yeah, it's growing.
Okay.
Um, I mean, in 2022, we did lose clients because they didn't believe in my abilities,
Mhm.
and that was a little bit painful.
Mhm.
And when you don't work at a large company, people will be like, "Well, how can I trust you?"
Mm, right. Now, after that all changed, the clients that stayed, they did okay with you, right?
Yeah. So in 2022, we did a shift. Anyone that owned exchange traded funds or bonds, we got out of those pretty much completely.
Mhm.
And then we reevaluated the market and bought wonderful companies at what we felt were undervalued prices.
Mhm.
And that's the beauty of investing in products is sometimes if you don't have a good choice, you could invest in a product. And then when there's shifts in the market, companies that you didn't like at a certain price become in your scope of what you're looking for.
Mm. Okay. So regarding like you kind of went over that quickly of determining. Okay, I kind of wanted more information for people that don't know how to do this. So where can people go to get a list of like yeah, they could go on E-Trade and it's all on there, but there's so much advice going on with what to buy. Okay. So what can somebody do? Where can somebody go, like truly, to go look at a viable list of companies that might be a good investment? And then what do they do to um, evaluate that? Like, what's step one, two, and three? Like, because listening, what we talked about, nobody could do it from what you just said. Okay. And I really kind of wanted like help for people that aren't in a
Mhm.
position yet to hire somebody like you, right? So, what's the first step for people that are really just want to learn this from scratch? What should they do?
Well, the first step is, and it's great now because you have access to the internet. You even have a ChatGPT, which can do the calculations for you. So you don't have to figure out how to do all the math if you're
Mm,
not a math person like you
mm,
did 5, 10 years ago.
mm-hmm.
So the first thing I look at is I run what's called a Graham calculator. So
Right.
that's from Benjamin Graham. That was Warren Buffett's mentor. And
Mm-hmm.
basically, it's the calculation, and you don't know how, we don't have to go in the calculation, but basically, you take all the numbers. You can go in the Chat GPT. Chat GPT has the numbers in there, and you say, "Hey, I want to run a Graham calculator for this company." But you do have to assume what's called a growth rate. So, how fast is that company going to grow on their earnings?
Mm,
Typically, companies aren't growing at like 50, 60% per year. So, you want to buy something, you want to put in something that's reasonable,
mm-hmm.
call it 5 to 7%.
Mm-hmm.
And then what that does is it compares that growth rate with the price of the company, with their earnings per share, compared to what you can get on a US Treasury, which is taking no risk.
Mm-hmm.
And then it says basically what the intrinsic value of the company is. So, what is the real value of the company versus what it's trading in the public markets? And that's
Mm,
step one is like, is it overvalued? Is it undervalued?
mm-hmm.
And then you make your decision. If it's undervalued, then you want to look further. If it's overvalued, then maybe you put it on your watch list on your phone and you just you wait for it to come back to a more reasonable price.
Mm. Okay, that's awesome because I know we were talking about the Graham calculator, and but we hadn't talked about the Chat GPT. That makes it so much easier, right?
Yeah, so like just today, um, we have a technology company that we bought at a really cheap price. It was somewhat speculative, but I mean, it got to a point where,
What company was that? And please don't. By the way, please do not anybody listening. This is not financial advice. I'm just curious. So we are not giving any financial advice. What's the name of the
mhm,
company?
it's called Palantir.
Oh, okay, I've heard of Palantir. Okay, and that's gone to a price where you felt like it's a great buy.
Yeah, I mean, it was below $10, which one of my rules is don't buy a company under $10.
Mm-hmm.
But sometimes you have to break the rules.
Mm-hmm.
Um, Sometimes the rules are made, you have to break the rules sometimes, but the rules are guidelines to protect yourself from things.
Yes.
So I bought it. So the key to investing is, heads I win, tails I don't lose much. Heads I do well, tails I don't lose much. So I put in enough where if I lost, I don't lose much. It's a flesh wound. It's not like losing my entire limb. Today it's at over $76. So I went into ChatGPT and I said, "Hey, can you run a gram calculator as based on the current earnings of Palantir with a growth rate of 50%? And could you tell me what the intrinsic value of the company is?" And it did all the calculations and basically it gave me a number less than what it's currently trading in the markets. So I thought about it and I was like, they make 55% of their money from government contracts. A new player can come in town and win those government contracts and they lose 55% of their revenue over the next 4 to 7 years. And I really don't know enough about the company on what they're going to do over the next 20 years. So locked in a good profit. And then actually stumbled across something kind of funny. We do some hedging with some of our clients that allow us to do it. So the amount of profit that we made, let's just say that profit was $1. We decided to take that profit and bet against the company going up in value. So that's hedging, meaning I made a good profit, but I feel like the company needs to come down to earth. So I figured if I made $1 and I bet $1 for it to go down and I lose 50% on that, I still make 50 cents.
Okay.
If I'm right and it is overvalued and it goes down, I can pretty much have my cake and eat it too.
Right.
At the same time, though, if it goes up 50%, I've already made so much that it doesn't really matter.
Right. So that's interesting that you explained the whole play there because, see, some people would say, okay, I'm going to go buy Palantir, but you're also hedging it, right?
Yeah, we did that today.
Okay, so you had just straight out bought it, but now you're thinking, let's do a hedge. So you're doing some creative stuff here, a little bit creative.
Yeah, I mean, I just thought of doing that. I put thought into it. I just didn't do it. But after I thought about it, I was having trouble selling some Palantir. So I asked ChatGPT. I'm like, why would this happen? And it tells me every reason under the sun. I don't have to think. Like ChatGPT just gives me the ideas, and I know how to learn how to decipher it over time. So it basically said like maybe there's more sellers than buyers. So I wasn't able to sell more of my position. So that's telling me that this is a selling opportunity. So after clicking the sell button for like 15, 20 minutes, I was able to get out of our position and I averaged it out over different prices. And then I was able to take a small short position based on the profits that we made. So if we made $1, I'm now betting against Palantir $1. So even if I'm wrong by 50%, which that'd be a big blunder, I still make 50 cents on my dollar.
Right. Okay, folks, if you're not like, a seasoned investor, I wouldn't play with what Josh is talking about. I think you no advice on this podcast, but just be careful. And Josh has been doing this many years, so I wouldn't take that as advice. Okay, but that was just a good example of a company that you bought, you sold it, and now you're shorting it, right?
Yep. Just a little bit though.
You sold a little bit of it.
No, I sold all of it, but I'm shorting a little bit.
Okay, so you made enough profit. You thought, I'm getting out of this now.
Well, bought it at like 950. It's at 76.
How long did that take?
Let's see. It was at like $9 in 2022.
Okay.
But it did go down like another 30% from there.
And
So
then
you
it
bought
went-
it. It's like, I'm down another 30%. I was like, well, I didn't buy so much where I care. So I didn't
Yes.
sell any.
Right. And now you made a profit. Okay. It took a couple of years. Okay, Josh. So thanks for sharing that. I thought it was just good to, it's rare that people are going through their processes and how they're thinking. I think that's fascinating for me, and I hope for other people, just to hear, not, oh, I do this, but okay, you go there, you go to ChatGPT. I didn't think of using ChatGPT for that kind of thing. I was thinking this morning, I'm not using it for enough, clearly. Okay, great. So that was super interesting. So what's one thing that you want to leave people with as far as just investment philosophy, not advice, because you can't give advice, but the mindset or philosophy of how to get started investing and not losing your shirt?
Pretty much you have to do the inverse of what is like natural.
Mm.
Like it's kind of like if gas prices went down $1, you'd get really happy.
Mhm.
If investments go down, people freak out.
Mm.
Versus when investments go down, your job as the investor becomes much easier because everything becomes more affordable.
Mhm.
Versus right now, as we're chatting, it's like December 2024, everything's at a lifetime high.
Mhm.
That makes finding those good companies, finding those good investments a lot more challenging.
Mm.
So if you don't know what to do, you're like, it's at the top. Well, how much higher could it go?
Mhm.
People have been saying that for the last however long the stock market's been open. Oh, it can't get any higher. It's at the
Mm.
highest. Well, it's
Mm.
always grown over time.
Mhm.
At the same time, being a little bit patient and sometimes doing nothing, allowing yourself to gather your thoughts is the best decision.
Mm. Well, I just think for people that already have stocks, it's like, wow, the profits are high now. Maybe just enjoy that, right? If you have already bought stocks, because mine are at since the election have shot up, the ones that I bought. And most people, it's great. It's really easy to feel like a rock star investor when the markets are up because everything is up, right? Um, so what you're saying is if what you have already is up, maybe just wait, right? And not start trying to buy other stuff that's overvalued.
Yeah, because you're still participating.
Mm,
Like if the market goes up,
yeah,
you're still in.
yeah.
If the market goes down, you have some extra money to play with.
Mm,
Um, and I mean that's all Warren Buffett does with his strategy is when the market's going up, he wants to participate in it.
mm-hmm,
When the market's going down, he wants to participate as little as possible.
mm,
And most people want to do the opposite. If the market goes up $1, they want to be up $1.25.
mm,
But if the market's down $1 on that same strategy, you'd also be down $1.25. So
mm,
you actually want to flip flop that thinking. If the market's up $1, you want to be up 80, 85 cents on the dollar. The
mm,
market's down $1, you want to be down 80, 85 cents on the dollar. So
mm,
limiting the scariness
mm-hmm.
so that way you can move money in when the time is right.
That's very true. When things are low, people are not buying. That's when you should buy. But it's like, I already lost all this much. You should really be doubling up when it's really low because it will go up, hopefully, with certain things. So that's so interesting. I think also what people struggle with, I struggle with, is when to sell. You know, do we just
hmm
buy and hold forever? But as you just said, you sold Palantir. So I think the struggle of a lot of people is to know when to sell.
Well, it depends on the company. So, I
Mm,
mean, you look at the price, the earnings of a company, and
mm,
that's basically telling you what is the price of the company that you're buying. It's like if you go into a store, you see a shirt for $9.99.
mm-hmm,
That's the price of the shirt. The price to earnings ratio is how expensive is this company that you want to buy? How expensive is this investment?
mm,
So, if the price to earnings ratio is good, then even if the company is at a high point, then you're like, hey, it's still affordable.
mm,
If it has a price to earnings ratio like Palantir's is like 300, that's
mm,
just silly.
mm,
That's like a silly valuation. So
mm,
basically, for every dollar you're putting in, you're buying. It's costing you that 300 multiple,
mm. Wow.
which is expensive.
Yeah. Yeah, it is. Okay. Well, thank you so much for sharing the inside way of how you're picking stocks. And thanks for turning up today, Josh. So, also, thank you everybody for listening. I hope you learned something, and I'd love to see you on the next episode of Business Wealth Impact. Please share and spread the love. See you soon. You're listening to the Business Wealth Impact Podcast, your source for empowering information and cutting edge ideas from the world's top minds. I'm your host, Jean Amlour, founder of seven-figure coaching company, Jean Amlour International. Join me on a journey to unleash your potential and create your highest success. Welcome to Business Wealth Impact.